I hope you all will be fine. Today I'm going to explain why it's not coming. It's not happening. Investing 101, a summary of the basics. Investing is all about making your savings multiple. Before we divide into all the details of how to do that, here are few investing basics for beginners. How much money you need to start investing? Not a lot. In fact, it's mathematically proven that better to start small and then to wait until you have more to deploy. Even if you try to play catch up down the road, that little eye opener is thanks to a magic formula called compound interest. We will get into how that works in a minute, and yep, we have got a calculator for it. But invest in stocks are one option. You can also consider investment vehicles that provide exposure to the stock market. The stock market is the place that that will deliver the best long-term return on your money. How to buy stocks? The easiest way to start investing in stocks and the most common is to buy a mutual fund. Is type of investing that pulls money from many investors and invests it in a group of different stocks. Call it the eggs in many baskets approach. The secret to making money in stocks: stay invested time to let your investment ride out the market's inevitable short-term rough patches, and temperament are the keys to investment success. So says a guy you might have heard of name Warren Buffett. Now that you have the lay of land, let's dig in. Saving versus investment. There's saving and then there's investing. Two big differences between them: time and the type of account you use as a holding pen for your money. Saving is what you do with the money you are doing to use to pay for short-term goals. Once in the next 5 years or so, that money belongs in an account where it's liquid, that is easily accessible and safe. Safe as such as high-yield savings account or even a CD of. If you are confident you won't need the funds until after a certain date. Investing is what you do with the money earmarked for long-term goals such as retirement. With a long-term horizon, you can make growth rather than liquidity than the priority. What's wrong with simply uh, playing it safe with all your retirement money and keeping it in cash? Inflation, dun dun dun. Over time, inflation erodes the purchasing power of cash. That effect is especially strong when inflation is high, but it also true during typically years when inflation is running 2% or 3%. At just 3% inflation, when you go to spend $100 will you stashed in a coffee cash can last year that money will only get you $97 worth of groceries compared with what it would have gotten you last year. In other words, the cash you have been sitting on does buy as much as it used to, because everything has gotten 73% more expensive. That's how it's possible to save money and lose money, that is spending power at the same time. Now imagine the effect of decades of inflation on words of money. Actually, you won't have to imagine this. Inflation calculator will show you. You want your long-term investment to outpace inflation, right? Well, should you invest in the stock market? One look at the historic rate of return of major asset classes shows that the stock market is going to give you the biggest bang for your stocks. Historically, the stock market's average annual return is 10% before inflation. Other asset classes rarely come close to that, but many people say that think it's too risky or they don't know how to invest money. While this is a valid concern and investing does carry the risk of loss, having a diverse portfolio can better equip you to weather market ups and downs and ultimately achieve your goals. Your dollars could become more valuable if you start investing now. You can let your savings dollars with a ride in a vehicle you can hold on to for years and have it possibly become more valuable than when you started. It's like reverse inflation. The hamburger you could buy for $1 when you were a kid would cost you $5 decades later, but you can't store the $1 burger away for years and sell when it's worth $5. Instead, you can buy shares in a bunch of companies involved in making that burger, the bun, and beef manufacturers, packaging, producers, retailers, and restaurants. We will show you how in a month and reap the rewards of their growth right alongside them. Check your potential returns investment calculator. The benefits of compound interest. What is compound interest? It's like runway snowball of money growing larger and larger as it rolls along. All you need to get it going is starter money. As interest starts to accumulate on your initial investment, it is added to your ball of cash. You continue to earn interest. Your balance expands in value and picks up speed, and on it goes. The sooner you get the snowball rolling, the bigger it has the potential to get. Now let's go over how to make your pennies multiply. So for watching my more videos, please like, share and subscribe to my channel. Allah Hafiz.